Welcome to TR Academy. In this video, we're going to see about the GST Act. You could have learned from the news that the central government is planning to pass 4 new bills on the GST, and they are going to pass it as a money bill in the parliament very soon, so that it gets rolled out and forms as a law from 1st July 2017. Before getting into what are the 4 bills, let's see on which amendment these bills are passed. The particular amendment is called as the 101st Amendment of the Constitution of India, or officially called as the Constitution 101 Act 2016. It was introduced in the Lok Sabha by the Finance Minister Arun Jaitley on 19 December 2014 as a bill. It was passed by the House on 6th of May 2015. It is then moved to the Rajya Sabha, where the Rajya Sabha referred it to a selected committee on May 14th. The selected committee, after reviewing all the aspects of the bill, submitted their report on 22nd July 2015. After the report has been reviewed, it was then passed on the Rajya Sabha. Once it has been passed on the Rajya Sabha on August 3rd, an amendment bill for the same has also been passed on the Lok Sabha on 8th August. So after this amendment bill, the bill was sent to each and every state for their ratification process to get their acceptance. Assam was the first state to accept it, and after getting the enough number of acceptance, then went for the president assent, and it got approved on 8th September 2016, and it was notified to the Gazette of India on the same day. So let's see what are the 4 bills that are going to be passed. The first one is the Central Goods and Service Tax Bill of 2017. This is going to levy and talk about the levy and the collection of tax on intra-state supply of goods or service, or both, by the central government. So it's going to be completely on the boundaries of a particular state. The Integrated Goods and Service Bill of 2017. This is going to be on the interstate supply of goods or service, or both. And the third one is going to be the Union Territory Goods Service Tax and Bill. This is going to be on the scale of Union Territories, taxes collected from the Union Territories without legislature. And the fourth one is the Goods and Service Tax Compensation to the States Bill 2017, or generally called as the Compensation Bill. It provides compensation to the states for the loss of revenue arising on account of implementation of the goods and service tax for a period of 5 years, as per section 18 of the Constitution 101 Act of 2016. So these are the 4 bills that are going to be passed. Let's see what is the purpose of bringing these 4 bills. The main purpose is going to be one single tax on supply of goods and service. So from the manufacturing stage till it reaches the final consumer, there is going to be only one single tax. So thereby the final consumer of the goods or the service will only have to bear the GST charged by the final dealer. So thereby what exactly happens is that it completely removes all the interim tax stages, like the excise duties, service tax, VAT, everything is get piled into one particular tax. So what are the benefits of this particular bills? It's going to simplify the administration, as it removes the multiple taxation system. As of now, what exactly happens is that if you buy some goods from another state, you need to pay the excise duty for that, you need to pay the central tax for that, and when you sell it over here for a particular state, within a state, you need to provide the service tax as well as the VAT. So you need to pay all these 4 tax on different stages. So which is going to be time consuming, as well as it's quite complicated. And this particular bills is introduced to simplify this process and make it a one go process. Uniform tax rate for all goods and services. There's going to be a simple tax rate. It's going to be for a particular product, this is going to be the standard tax. The manufacturer will be benefited by the tax regime, as it's going to reduce the tax levied on them. It's going to reduce the hidden cost during the trade. So it's going to be nullified, to say exactly, reducing tax burden on daily consumer items. It's going to improve the ease of doing business, and they have predicted that it's going to lift the GDP on about 1 to 2%. And all the compliance, whatever the process is going to be, it's going to be completely online, and they have minimized the interaction between a person to the person, so that the tax receiver or the office which receives the tax is going to follow through all the online process mostly. Let us see the roadblocks in passing this particular bill. The actual problem is going to be on the rate fitment, because there are thousands of commodities and services which are to be have a standard rate or a uniform tax rate. And as for the GST bill is concerned, they have given only 5 rate slabs, which are 0, 5%, 12%, 18%, and 28%. What exactly happens in this is that they have mentioned that the luxury cars, cigarettes, and health hazardous foods or beverages are going to be slabbed in the top scale. That is, the maximum rate slab is going to be fixed for all these products. Whereas they have mentioned that the rate slab for BD and some other products which are of importance for the for states, on collection of tax for the states, it's going to be on the lower rate slabs. So it's going to be a mismatch of the products, as well as there are troubles in providing the compensation to the states, because this going to completely hinder the revenue that a particular state is going to get, because everything has been unified, everything is getting centralized, so all the payments directly goes to the central government. So this unification process is very good when we consider the country as a whole, but our country performs in a different way, where we have both the central as well as the state government, and we have the budget sessions separately for the central as well as the state. So the revenue for state is a must, and this is going to hinder. As for the GST Act is provided, the compensation bill that they have mentioned is that they're going to provide the compensation for the respective states for a period of 5 years. So after that, it's not going to be there. The central government won't be providing any kind of compensation to any states. So these two things, the fixation of the rates as well as the compensation to the states, is going to be the major roadblocks considering this particular 4 bills. So what to be noted from this particular topic of importance? There might be questions asked on ratification process, what is ratification is, on which particular article they have mentioned this ratification process, who can take part in it, how can a state be against a ratification process, why should center get ratified from all the states on passing any particular bill. So you need to concentrate on the particular element that relates to the constitution, as well as there going to be a particular questions made by asked on the article 279A of the 101 Act, and there can be question also on ITC, that is input tax credit, because this particular bill has stated that the manufacturing concern or the service concern, the companies which are having a turnover of less than 20 lakhs doesn't need to file for the GST, but they can do that. They can get into the GST regime through the input tax credit system. So input tax credit is also an important topic that you have to take a note on, because it might also be asked in the questions. Thank you very much. I hope this has cleared you or given some basic information of what is GST is and what are the 4 GST bills that are going to be passed. Please subscribe as well as follow our Facebook page to get the notification and the messages about the video updates that we are going to put forth, and we are planning to start study material support very soon. So if you like this video, click the like button. Thank you very much for listening. We'll catch up in the next update.